Hey everyone, welcome to this video on how to start investing in the stock market. Investing in the stock market can seem intimidating at first, but with the right knowledge and strategies, it can be an excellent way to build wealth over time. In this video, we'll go over 5 key concepts that will help beginners get started with investing in the stock market. Educate yourself. The first concept is to educate yourself about investing. It's important to understand the basics of investing before you start investing your hard-earned money in the stock market. There are many resources available online, such as books, articles, videos, and webinars, that can help you get a solid foundation of knowledge. Some popular books on investing include The Intelligent Investor by Benjamin Graham, A Random Walk Down Wall Street by Burton Malkiel, and The Little Book of Common Sense Investing by John C. Bogle. Actionable step. Choose a few resources that appeal to you and start learning. Don't try to learn everything at once, and focus on understanding the basics before diving into more advanced topics. Set your goals and risk tolerance. The second concept is to set your investment goals and assess your risk tolerance. Your investment goals will depend on your financial situation, age, and long-term financial objectives. Are you investing for short-term gains or long-term growth? Do you want to invest in income-producing assets or capital appreciation? Assessing your risk tolerance is also crucial because investing in the stock market involves risk. Some people are comfortable taking more significant risks, while others prefer to take a more cautious approach. Knowing your risk tolerance will help you determine the right mix of investments for your portfolio. Actionable step. Take some time to think about your investment goals and risk tolerance. Write down your goals and what you hope to achieve with your investments. Consider taking a risk tolerance questionnaire to determine your comfort level with different levels of risk. Start small. The third concept is to start small. It's essential to start with a small investment amount, preferably in a low-risk investment like a mutual fund or exchange-traded fund (ETF). This will help you gain experience and confidence in the stock market. Actionable step. Choose a low-cost mutual fund or ETF that aligns with your investment goals and risk tolerance. Start with a small investment amount, and gradually increase your investment as you gain more experience and confidence. Diversify your portfolio. The fourth concept is to diversify your portfolio. This means spreading your investments across multiple companies, industries, and geographic regions. Diversification helps to minimize risk in your portfolio and avoid putting all your eggs in one basket. Actionable step. Invest in a mix of stocks, bonds, and other assets that align with your investment goals and risk tolerance. Consider investing in different industries and geographic regions to reduce your exposure to any one company or country's economic risks. The fifth concept is to monitor and adjust your portfolio regularly. Keep track of your investments and adjust your portfolio as needed. Regularly reviewing your portfolio will help you identify any underperforming stocks and make necessary changes. Actionable step. Set a regular schedule for reviewing your portfolio, such as quarterly or annually. Monitor your investments' performance and adjust your portfolio as needed to stay on track with your investment goals and risk tolerance. In conclusion, investing in the stock market can be a great way to build wealth over the long term. However, it's important for beginners to take these 5 steps to set themselves up for success. Educate yourself, set your goals and risk tolerance, start small, diversify your portfolio, and monitor and adjust your portfolio. By following these steps, beginners can build a well-diversified portfolio that aligns with their investment goals and risk tolerance. Remember, investing is a long-term game, so it's important to be patient and disciplined, and to avoid making emotional decisions based on short-term market fluctuations. With time and experience, you can become a successful investor and achieve your financial goals.